Eskom's coal contracts are facing increasing scrutiny from energy regulator Nersa, who is proposing to benchmark the price of coal Eskom buys from mining companies. This is to ensure greater transparency. The utility itself is also increasingly putting pressure on suppliers around prices and the quality of coal delivered. Joining us to discuss the problems and implications for electricity users is Finweek Editor Jana Marais. Jana, why all this attention now on Eskom and its contractors?
Yes, there's been quite a bit of news on it. I think the big thing is that Eskom has been asking for tariff hikes, and Nersa has been quite tough on them and not giving them the increases that they've been asking for. And one of the areas where Eskom has seen their cost increase quite a bit is in primary energy. So, for example, the cost of coal and the diesel that they use. Yeah. So Nersa is basically saying, well, we want to know that what you're paying for coal and what you're claiming back in terms of tariffs are actually fair prices. So yes, and these contracts have typically been long-term contracts that are confidential. So you don't really know if you're Glencore and if you're Anglo-American and if you're BHP Billiton, who's getting the, who's actually overcharging or who's not, because there's no fair benchmark to measure it against.
What have been the implications for these coal mining companies that are supplying coal to Eskom?
Yeah, I think the coal mining companies are in for a tough time, and we've seen, for example, that 2 billion rand fine that Eskom imposed on Glencore's Optimum mine because of the quality of the coal that was not up to standard, and basically that shut down that mine, it put it into business rescue, and that's now been bought by the Guptas and they're one of their Oak Bay subsidiaries. And the question is, how, if Glencore couldn't make money out of that mine, how do you think you're going to do it if you're Oak Bay? So I think that's also why the contracts have been in the news a bit more, because we don't actually know what Eskom pays for these things, and how do you know that it's not, there's no incentives built into the price to make it worthwhile if you're connected. But anyway, I think the other issue is that the nature of Eskom's supply model has changed quite a bit since 2008 and the blackouts we saw then. Yeah. So where typically you would have a mine that's captive to a power station. So for example, Exxaro is a good example. Eskom would put up money that's they will put in some of the capital, the mining company would put up some of the capital. The contracts will be long-term contracts on a cost-plus basis, and that has changed quite a bit now. So you see a lot more smaller suppliers who are, the mines may not be that cheap to operate, so that's also a reason why the prices have gone up quite a bit.
And this means what for us as electricity consumers?
Well, I think the concerning thing for me is we should look at, will blue-chip mining companies still be interested in investing in coal assets in South Africa? And we've seen companies like Anglo saying, they want to try and move away from Eskom coal. But I think transparency will be good. If there's more competition and there's more light on what people are paying, then probably those costs will be contained much better. So let's hope for that.
Jana, thank you so much for joining us, giving us the lowdown on Eskom and its contractors. That was Finweek Editor Jana Marais.